Hello and welcome everyone. My name is Sylvia Vołos. I'm a risk solutions consultant at Refinitiv. Thank you so much for joining us for today's webinar on AML regulation development. I really appreciate you taking the time, especially in the current situation when our minds are preoccupied with the COVID-19 pandemic and the impact it's having on our lives. I sincerely hope that you and your loved ones are healthy and safe. I would like to kick off today with a polling question to test the system capacity, but also to see if there are some positive aspects of the current unknown situation, given the restrictions of movement and everyone's change of focus. So here's the question. The impact of COVID-19 on the world economy will undeniably be significant. But how do you think it will impact financial crime? A, increase, B, decrease, or C, there won't be much impact? Please choose your answer now on your screen, and I'll give you 10 seconds to submit your answers. Here are the results to the question on the possible impact of the COVID-19 pandemic on financial crime. 95.5% of the audience thinks that there may be an increase of financial crime. Very interesting result, and I think in line with the announcement yesterday actually in the US when DOJ filed its first enforcement action against COVID-19 fraud. Federal court issued temporary restriction order against the website offering fraudulent coronavirus vaccine. Interesting times ahead of us. I hope everybody will stay healthy and safety, and maybe our prediction will not turn out as bad. Okay, so before we begin with the presentation, I need to cover a few housekeeping items. First of all, at the bottom of your audience console, there are multiple application widgets. If you have any questions during the webcast, you can click on the Q&A widget at the bottom to submit your question. We'll try to get to as many questions as we can at the end. If you have a technical question, however, problems with audio and so on, please can you use the question mark icon. And also remember that if the slides are stuck, you should try to refresh the page as the first step, and it may take a few seconds for slides to advance, so please be patient. Secondly, if you are able to access if you would like to read a little bit more about the topics that we are discussing today, you can access additional resources on those topics, and these are parked in the resources section on the right-hand side. Next, we will send you a recording of this webcast and also the copy of today's slide deck in a few days' time. And last but not least, at the end of the webinar, a survey box will pop up. I would really appreciate it if you can take a moment to fill this out and provide us with your feedback. So without further ado, I'm truly delighted to facilitate the call with the experts in the AML field who will share their knowledge with us today. It's definitely not coincidental that they are here today with us, and I'm really looking forward to each of their presentations. So let me introduce my guests to you. So we have with us Aurelia Balciūnas, who's Senior Associate at Cobalt, and who's joining us from Lithuania. Good morning, Aurelia.
Hello, everybody.
Hello, and then we have Roger Kaiser, who's Senior Policy Advisor at the European Banking Federation, and Roger is dialing in from Belgium today. Hello, Roger.
Hello, Sylvia. Hello, everyone.
Hi, and last but not least, we have Ntombi Njema, Executive Head, Group Sanctions Desk at the Standard Bank Group, and Ntombi is joining us today from South Africa. Hello, Ntombi.
Hello, Sylvia. Hello, everybody.
So if anybody from the audience haven't had the pleasure of meeting our speakers before, you can read more details about their work and the specialization in the speaker's bio widget on the left-hand side. So I won't be taking too much time for detailed introductions today. Just a very warm welcome, and thank you so much for joining us today. 2 years ago, Refinitiv, together with initial two other founding members, Europol and the World Economic Forum, formed the Global Coalition to Fight Financial Crime. The European Banking Federation actually recently joined this coalition, so a warm welcome to Roger and his colleagues. And among the coalition's objectives, and in general for Refinitiv risk experts, knowledge exchange is one of our priorities. And especially now when events and public gatherings have been halted by most governments, webinars are really a great knowledge-sharing method. So we've recently organized a webinar on sanctions, and in the coming weeks, we will also hold a third-party risk webinar series called Where Compliance Ends and Sustainability Begins. The first session of that webinar is scheduled on the 28th of April, so please watch out for the registration link on our social media profiles and also in the follow-up email to today's session. I would encourage you to sign up to those sessions as well. So what is the current state of affairs when it comes to effectiveness of AML frameworks? I've prepared some data for illustration, as you see on this slide. So we have the first number. Almost $3 trillion is either lost or spent on fighting financial crime by the private sector. This number is greater than most individual countries' GDP. In Europe, the statistics show that only 1.1% of criminal profits are confiscated at the EU level. And when it comes to SARS, suspicious activity reports, they are growing by 11% annually, while a whopping 97% of SARS is actually of no immediate value to financial intelligence units. To me, these numbers are a pretty clear demonstration that the AML framework needs a thorough revision. And as my guest speakers, Roger, Aurelia, and Tombi, will discuss in a few minutes, activities are taking place. But I think it's important to stop for a minute and look at FATF before we look at the EMEA region or the EU specifically. The Financial Action Task Force undeniably has been the most influential organization worldwide developing policies to combat money laundering and terrorism financing. And governments across the world really look to FATF for the recommendations, and they do implement them, although with varying levels of efficacy. So what's the latest from FATF? The FATF plenary meeting was held last month in Paris, and more than 800 representatives from around the world, including IMF, UN, and World Bank, came together to discuss the hot topics of AML. And the three key areas debated during those sessions were A, virtual assets and digital identity, B, specific countries' progress, and C, other topics that included combating the laundering of proceeds of the illegal wildlife trade. So I wanted to comment briefly on those three key points. The first point, digital payments, digital identity. The digital payments are growing at an estimated 12.7% annually. Really, there's no hiding from this. And criminals are using virtual assets and digital channels more and more. So the AML regime and policies will need to respond to those new threats. But also for the sake of the effectiveness of business, the business and compliance teams should really start embracing technology a little bit more. Client onboarding procedures will need to be adjusted for the digital era. And financial institutions are being encouraged in some countries to apply technology to the KYC and onboarding processes. So a great example of that encouragement would be the statement issued by the U.S. FinCEN, the Financial Crimes Enforcement Network. FinCEN encouraged innovative industry approaches to AML compliance. But, most interesting, not only did FinCEN encourage innovation with the existing tools and to use new technologies, but most critically, it recognized that innovative pilot programs should not subject banks to supervisory criticism even if the pilot programs ultimately prove unsuccessful. I think it's a key message to encourage and make sure that nobody's going to be penalized if it doesn't go exactly as planned. And this month, FATF published guidance on how digital ID systems can be used to conduct certain elements of customer due diligence under its recommendation 10. I have added the guidance to the webinar resources widget, so if you haven't had a chance, please do review that FATF report. On the second point, country implementation process, I wanted to share just one example here. I've actually recently reviewed the February 2020 FATF mutual evaluation of 99 jurisdictions that looked specifically at the assessment of immediate outcome 5. So I wanted to see how at global scale countries have been progressing in opening up registrars of beneficial ownership and leading towards closing the big gap we have right now, the business secrecy, the gap that makes financial crime so much easier to commit, and the gap that makes it so much more difficult to detect financial crime. So when it comes to immediate outcome 5, it's really a reflection of how well the countries are doing implementing FATF recommendation 24. And out of the 99 jurisdictions that were assessed in the recent years, not a single location has performed well when it comes to ultimate beneficial ownership registrars and the relevant legislation. Only 10 countries, as you see at the bottom of the slide, were assessed at a substantial level of effectiveness. And sadly, the remaining 89 assessed jurisdictions were more or less evenly split into bad job done and nothing done at all. And moving on to the third key point, that, as discussed in the February plenary meeting organized by FATF, which was illegal wildlife trafficking. I actually think we should expand this to environmental crime or green crime, which is generally any abuse of the environment. So not only wildlife trafficking, but also crimes such as ivory smuggling, illegal logging, or toxic waste dumping. The reason why this topic is important in the context of the future AML framework is because it's not only FATF, but Davos, Europol, EU, UN. Most policymakers and international AML forums are really actively looking into environmental crime issues. I would personally guess that similarly as social crimes, modern day slavery, human trafficking, child labor, those crimes have gained attention and have been reflected in local specific regulations recently, such as UK Modern Day Slavery Act, Subtan 2 in France, or child labor due diligence law in the Netherlands. I think similarly to what happened with regards to those crimes, we should expect legislation related to green crime and its reflection in AML policies. So just to summarize these 3 key points as discussed recently at the FATF meeting, I believe that AML regulations will reflect this in the near future. Technology really needs to be embraced by business, but also by regulators in the region. Then business transparency and other recommendations need to be taken more seriously and implemented effectively. And we need to adjust our thinking about predicate offense such as environmental crime. So moving on to the EU regulation and speaking of effectiveness of implementation of FATF recommendation, I'll give now the floor to my first guest, Aurelia, who is an expert in the field. And Aurelia will share with us how well EU member states have done so far on the 5th AML Directive implementation, but more importantly, what is coming next with the 6th AMLD. Aurelia, welcome, and shall we start with a quick polling question to audience?
Yes, sure. Thank you.
The question from Aurelia is, has the 5th AMLD been implemented in your country? Please, can everybody in the audience pick your answer? Yes, no, I don't know, and click submit button now. Moving on to the results, to the question, has the 5th AML Directive been implemented in your country? 70% of the audience said yes, 20% said no, and 9% said I wasn't sure about the level of implementation. Aurelia, what do you think about the results of the polling question?
Well, it's not very much surprising. I would have expected for such results, especially because of the fact that we still have not seen the implementation table. So the only information where we could get from our friends or public information, which was the main source for my personal presentation. So once again, thank you, Sylvia, for introducing the topic and the polling question, and thank you for the audience for participating. Before starting, what I wanted to say and what I have mentioned also in all my posts, that indeed this is the best time to upgrade our knowledge, and once Corona crisis is stopped, we will have even more work to keep our companies going, and definitely not enough time for upgrading our knowledge. So this is the best time to discuss about AML matters right now. And in terms of implementation of AML 5th and 6th directives, one cannot deny that Corona might affect the implementation process in terms of timing. However, right now we need to focus on two very important dates. So as we already all know, AML 5 directive was adopted in 2018 and had to be implemented by 10th January 2020, whereas the 6th directive implementation is upcoming. It was adopted again in 2018, but it has to be implemented by December 2020. So we still have some timing. Now, regarding public information that we have is that, well, although the implementation table is not yet published, and it is not known whether the directive has been properly transposed into each country's national law, we cannot deny that it may subsequently become apparent that the directive has been partially transposed by the member states. However, what we see right now from the Commission that 8 countries, which are included in this map, these countries have been given with a formal notice for no notification regarding measures taken. So it might be the case that either these measures have not been implemented yet, or no notifications have not been made. But what happens next is that if they do not send a formal reply within 2 months, and the member states continue not to comply, the Commission may decide to refer the matter to the European Court of Justice. I do not expect that this might happen, but we never know, and we have to be aware, especially in terms of this Corona crisis, which definitely delays the process, because right now everybody is focusing on taking the laws on focusing on the crisis. Now, what we have discovered when checking the implementation process in different countries, we can see that a lot of the countries have taken measures to transpose the AMLD 5. However, it is still not clear whether it has been fully transposed into national law. For example, France has only partially implemented the directive, at least according to official sources in its own law in 2009. In Estonia, only one set of amendments related to the directive has came into force this year. Another set of amendments are still under discussion. Some practitioners claim that Polish AML Act fully corresponds with the directive. And as far as we are, and I am myself practicing in Lithuania, Lithuania and Latvia have fully transposed the provisions of the directive. But now, when we go into separate sections and separate topics, I know that Tomby will be talking about UBO register, but some information about it. So, in terms of UBO register and its transposition into national law, it's not functioning in some of the countries. The situation, for example, in Lithuania is that everybody is preparing for opening the register. The register is actually active, but UBO function is not working yet. And each and every year we get a notification from the company's register that it will be shortly implemented, but still not everything has been done what is necessary. And in terms of this crisis, I've heard that we did not get enough funding, so it may delay the process. And the same is in the UK. So what we heard is that the process is struggling due to lack of funding, technical barriers, amount of data, etc. However, good news is that in some of the countries, the UBO register is actually operational before the implementation of the directive. For example, in UBO, In Belgium, UBO register went live in 2018, and Belgian companies right now have to submit their UBO data by 31st of March. I have not seen yet data whether all this information has been submitted, but actually this was one of their goals in 2019. And in Germany, the same. The UBO register is already working since implementation of the 4th AML Directive. Now, what we have also heard from the public information is that Germany has also implemented the directive. UK has also did the same. And as for Malta, Malta has reported that the government has given its assurance that it will be soon fully implemented. So hopefully this is true in this case. I'm sorry, I'm going back to one of the slides. Yeah. Now, individual approach and some additional provisions about more stringent requirements. So in Bulgaria, more stringent requirements are going to be adopted. The same approach was followed actually even in 2018. In Ireland, criminal justice bill establishes additional measures which will support the Criminal Assets Bureau and Ireland's National Police Service with regard to their power to access bank records. Impact of media, so what we heard and what we understand is that in Germany, some practitioners stress the likelihood that the Federal Administrative Office will apply stricter assessment standards due to increased media presence. So this means that in Germany, it might be the case that more stringent requirements as in Malta will apply. Now, as for implementation of the 6th AML Directive, so we already know that we still have time. So we have time until December. And some countries have already started working with this and implementing their national laws. So according to official data, only the following countries have implemented and taken the measures to apply AML 6 Directive. So this is Czech Republic, France, Croatia, and Romania. Congratulations with that. Germany has already also drafted a new bill to transpose. As for Lithuania, because I can speak about my own country, so in Lithuania, some of the provisions are already there and are already implemented. However, they have to be amended. For example, in Lithuania, we do not have punishment for, or this punishment is not clear for the possession of illegal property. So this will be introduced in one of the articles implementing the illegal possession of property gained from AML related activities. And also the punishment for that activity is only up to 2 years, so it will be increased in accordance with the directive up to 4 years. Now, what we heard about Brexit, of course, Brexit is also touching this process. Following the withdrawal of the UK implementation has been questioned. However, as far as we are aware, AML directives have been implemented in the UK to the extent possible. As for cooperation, protocols allow not to participate in this project. However, it might be the case that either Denmark or UK or Ireland decide to participate in this cooperation project, and they will do so. And Ireland has also decided that it will opt in the implementation of AML 6. So this is very brief and very short presentation about the implementation of the directive. For me, actually, it was very awkward not to see all you participating in this webinar. However, if you see that you have any questions, please post them during the Q&A, and then I will try to answer them. Thank you very much.
Brilliant. Thank you so much, Aurelia, for the detailed run through European member states. And before we move on to our next speaker, Roger Kaiser, who's going to talk us through European Banking Federation recent developments, I have another polling question to the audience. So the next question is, what should be the focus of the future EU AML regulation? And we have three options. A, clarification of the risk-based approach. B, modernization of the KYC policy. Or C, ensuring that the scope of the framework encompasses new technology-based businesses. Please choose your answer and click Submit button now. Okay, moving on to the answers to the question, what should be the focus of the future of the AML regulation in EU? Let's see the answers. It looks like half of the audience voted for ensuring that the scope of the framework includes new technology-based businesses. And the two remaining answers, clarification of the risk-based approach and modernization of the KYC policy, is more or less evenly split. Roger, what do you think about the suggestions from our audience here?
Well, certainly interesting to see. I would say regulatory convergence is absolutely key, and those three aspects are equally important and should be covered in the new regulation. I will address those aspects in my presentation anyway. So allow me to briefly introduce the European Banking Federation, the EBF, which is the voice of European banks. The EBF collectively represents the national banking associations of European countries, including all EU member states, the United Kingdom, the EFTA countries, which all together represent approximately 3,500 banks. Since 2015, money laundering scandals and tax leaks has made the headlines. A first wave of events in 2015-2016 included the Swiss leaks and the Panama Papers. And in the EU, this first wave triggered a number of initiatives, among which the setting up of a special committee by the European Parliament, and we have just talked about that, the adoption of amendments to the 4th Anti-Money Laundering Directive, the AMLD 5. Since 2018, a second wave of scandals has involved a number of European banks, impacting the reputation of the sector as a whole. This second wave started with the case of a Latvian bank, ABLV, which lost its banking license and had to self-liquidate. This therefore became apparent that money laundering issues may rapidly become prudential issues and may affect the viability of a bank and the stability of the banking sector as a whole. This second wave of events has triggered, among others, a reinforcement of the European Banking Authority, the EBA, and the adoption of an action plan by the Council, which mandated the Commission to draft a post-mortem report and to take action to improve the effectiveness of the EU AML CFT framework. Now, money laundering is defined as a process of transforming the proceeds of crime into ostensibly legitimate assets. In other words, to introduce dirty money in the official financial system. However, it's about much more than white-collar crime. It's often connected to organized crime gangs and other threats, which include financial fraud and corruption, counterfeiting and smuggling, illegal drugs crime, human trafficking, and terrorism. Fighting financial crime and money laundering consists in cutting resources to criminals, to organized crime gangs, and to terrorists. Over the last few years, awareness has arisen about the ineffectiveness of the current EU AML CFT framework. The European Banking Federation, the EBF, has made its own assessment of the EU AML CFT framework and has identified 4 major challenges, i.e. 4 priority areas where ineffectiveness urgently needs to be addressed. They are the regulatory fragmentation, the supervisory fragmentation, insufficient cooperation between the actors of the AML ecosystem, and the lack of efficient tools and suboptimal use of technologies. The EBF published earlier this month a blueprint for an effective EU framework to fight money laundering, which is entitled Lifting the Spell of Dirty Money. In this blueprint, the EBF is putting forward a set of 20 concrete policy recommendations related to the 4 priority areas that we have identified. First, we recommend to harmonize the EU regulatory framework, focusing on a clarification of the risk-based approach and a modernization and standardization of the KYC policy. Second, we recommend to empower the relevant EU institutions and agencies to fight financial crime. Among others, the role of the European Banking Authority, the EBA, as a rule setter is pivotal and should be further enhanced. The EBA will have to provide fully harmonized standards that will help enhance supervisory convergence and should focus on the mitigation of risks. It is also absolutely key to strengthen AML CFT supervision. This requires further integration of AML CFT considerations into prudential supervision and more efficient EU coordination of AML CFT supervisors, which may require some kind of centralization of supervisory power. Third, we recommend to enable all actors in the AML CFT ecosystem to cooperate more efficiently. A coherent approach for information sharing must be adopted, which will balance data protection and financial crime prevention. In this respect, the adoption of an EU-wide GDPR AML guidance would be welcomed. The EBS particularly emphasizes the need for feedback from FIUs to reporting entities that have sent suspicious activities report. And finally, we also strongly encourage the development of public-private partnerships. Fourth, we recommend to enable financial institutions to be smarter than criminals by deploying effective tools and exploiting new technologies. In this respect, we encourage the use of enhanced analytics and machine learning tools for KYC purposes, and we also call for beneficial ownership transparency to be based on better designed ultimate beneficial owner registers. Banks are the gatekeepers of the financial system. They control the access of customers to the financial system. AML competent authorities extensively rely on banks in the fight against financial crime through a series of due diligence, transaction monitoring, and reporting requirements. Banks play a crucial role in detecting money laundering-related transactions. And this is why banks should be part of the solution. As banks, we consider it our prime responsibility to support the efforts of the public sector in combating money laundering. The EBF, as the voice of European banks, aims to be at the forefront of this battle. Thank you.
Thank you so much, Roger. And we'll move on to the last presentation for today. We have Tombi, who will now walk us through the main challenges that institutions face with regards to current AML regime, but also the potential opportunities that the new directions we're going to. Tombi, thank you for joining us. And before we move on to your presentation, let's again ask a polling question to audience. So here's the question. Has your country set up beneficial ownership registers? The answers are yes, no, I don't know. Fairly straightforward answers, so please submit your answers now. So let's see what the audience says about the beneficial ownership register implementation in their own country. 64% of audience said yes, the UBO registrars have been implemented in their countries. 25% says no, and 11% says I don't know. What is your take on those answers, Tombi?
Sylvia, thank you so much. Look, it's not surprising at all. I was expecting a result that looks like this. And I think, just to echo what my fellow panelists have said before, the challenge of UBO registers is one that touches quite a lot of us and at different levels. But perhaps just to then speak to the heart of what I was wanting to say here. The UBO issue is an issue because through distancing one's assets from themselves, that practice makes it very challenging for banks to manage the risk of money laundering. I think it was yourself, Sylvia, and Aurelian, as well as Roger, that touched on this. So it is highly, highly important for governments to assist banks by putting these type of things in place. But I'm not going to speak much more about that, but rather to speak to the opportunities that are there for banks to explore. All of us know, and especially with this COVID-19 pandemic now going, that the fourth industrial revolution presents a heck of a lot of opportunities for us to leverage. And the concept of ultimate beneficial ownership does not escape both the challenges and the opportunities that come with UBO. What I just wanted to highlight to the audience is some out-of-the-box thinking, and some out-of-the-box thinking specifically in the utopia, the perfect world where we all have functional UBO registers. In that world, there exists very many opportunities, specifically from a big data handling perspective, for us to do quite a lot as financial institutions. I don't know how much of the audience knows about structured and unstructured data, but again, not looking to explain those concepts. The opportunities that I want to speak to is that when you have financial institutions that have geared themselves up to interact with their data from a structured perspective, we could run algorithms on our UBO data that would make the following things quite much more simpler than what we're doing now. Sanction screening from the perspective of the OFAC 50% rule and the OFAC sectorial sanctions is quite a challenge for most of us right now. But if you were to combine your UBO compliance from a directive perspective with your 4IR capability as a bank and start interrogating that structured data, determining things like, is this company held 50% or more by an OFAC-sanctioned entity, becomes far more easier than it is today. Determining things like, does this particular entity fall foul of the OFAC sanctions, sectorial sanctions rather, becomes far more easier than it is today. Like everything else, sanction screening is also then coupled with our capability to report on SARS. And again here, in the perfect world where we all have functional UBO registers, the opportunities that exist for bank are the data mining algorithms that we can apply to that data to make our monitoring activities so much more effective. This is where you can pick up on complex patterns that would show you suspicious activity that's happening, even though the UBOs in those particular scenarios are going through a great length of complexity to try and mask their true nature. Again, what are the challenges? The challenges are: do we have functional registers in the different countries? Other sets of challenges are: have our institutions fully embraced the fourth industrial revolutions and are working full steam ahead to enable themselves to interrogate structured, unstructured data, to use data handling models? I know a lot of what I'm saying right now is not a natural language for AML CFT officers, but I foresee a world that has both challenges and opportunities that's going to overtake us soon, where compliance officers are needing to speak this language more so in the future than right now. So then just perhaps, Sylvia, if you, yeah.
Sorry, I was on mute. Thank you so much, Ntombi. So let's move on to one more polling question, a little bit more specific here. Does your financial institution bank any cryptocurrency dealers? And again, straightforward answers: A, yes; B, no; C, I don't know. Once you've picked your answer, please click on submit button and we'll move on to the results. Does your financial institution bank any cryptocurrency dealers? Oh, there you go. 84% of the audience says no. What do you think of that, Ntombi?
Sure. Again, not a surprise. So the thing with this cryptocurrency dealers is, I think as financial institutions, we are all in the same boat. There's a popular and a very true narrative that says that cryptocurrency-based currencies function from the perspective of giving the users a great deal of anonymity. Again, as AML CFT practitioners, we can all agree that what we do is founded on the cardinal principle of being able to identify and verify who you are dealing with. And by design, these cryptocurrencies give the holders of those assets the ability to stay anonymous. So the fact that this high percentage of no's is coming in is no surprise at all. And I suppose in that lies the very challenge that banks are needing to deal with. How are financial institutions meant to interact with this fast-growing, and I think, again, at the beginning of the presentation, Sylvia, I think it was you who spoke to it, we are not going to be able to escape as financial institutions this movement of crypto assets. It is growing and it will continue to grow. The challenge, how do we then deal with it when inherently this product comes with the ability to give its users anonymity? I'll give you some insights in terms of what we are doing in South Africa. So from a South Africa perspective, my colleagues and I are part of a working group that our FIU and our regulator has set up. And at this working group, our FIU and regulator have put it very plainly on the table to say, guys, this is a challenge that we as regulators are going to need to partner with yourselves to actually get over the hurdle of looking at this. What's interesting is that the regulator has opened up their doors to say, banks, you have very large research teams. You are very much in the middle of this financial activity. We are looking to you to bring to us any ideas that you may have in terms of how is it best to regulate this particular space. What's interesting as well is that we also have a few crypto asset dealers that have joined that working group, and they have actually said, we want to be regulated. We don't want to be looked at as this risky product that everybody's trying to run away from. So what are the opportunities that exist? I invite you as my fellow AML CFT practitioners to perhaps look out for those opportunities in your own jurisdictions, in your own countries, because I really think that in the very near future, if it's not already happening in your space, your own regulators and your own FIU might reach out to you and say, listen, as a financial institution, are you interested to partner with us in trying to wrap our heads around how do we manage the AML CFT risk that is presented through these products? I wouldn't want to go any further, and to be honest, I don't have much to say. And it is also time for me to hand back to Sylvia in terms of opening the floor for further questions, I think. Thank you, Sylvia.
Thank you so much, Ntombi. That was really interesting. And we do have quite a few questions coming in on the chat. So if you have a question, please click on Q&A widget at the bottom of the page and submit your question there. We may not have the time to go through all of the questions, but we'll do our best, and then we can follow up by emails to those questions that we haven't had a chance to answer. So let me go back to Roger and the EU regulation. One question Roger submitted was, do you think the EU needs to move towards a regulation instead of directive? What's your take on that?
Yes. Well, I'm there.
Okay.
Well, today the EU AML CFT framework is based on directives which provide for minimum harmonization, and this has so far led to quite significant divergences between member states in how they have implemented and interpreted the rules. So yes, we think we are in favor of a regulation which would take over, at least to the extent possible, the content of the AMLD, and which would take back the core principle of the AMLD. And there are a number of advantages for that, because that will help harmonization, that would help develop more effective policies and processes for financial institutions that operate cross-border or worldwide, that will facilitate cross-border supervision and public-private cooperation, and notably, this will also prevent criminals to use those jurisdictions which are the weakest and which have adopted the weakest option in the transposition. So yes, very much in favor of a directly applicable regulation.
Mm-hmm, mm-hmm. Thank you, Roger. And actually, there's another question that's a little bit related, quite related. The question is if we should go for enhanced supervisory coordination by giving EBA more power, but also responsibility remains at national level, or should we go for centralization of power at EU level? So, for instance, ECB or new AML EU authority.
Yeah. Well, what is clear is that the role of supervisors in AML CFT should be reinforced. So AML CFT considerations must be better integrated into prudential supervision. Now we also need to resolve the problem of supervisory fragmentation. We need supervisory convergence, and doing that, we are in in the opinion that we should focus on managing the risk. That's very important. And we indeed need a more efficient coordination between national AML CFT supervisors. Now, whether this should take the form of a centralization of the supervisory power, I would say most probably, but there are a number of options to do that. I think there are 3 options that are still discussed at political level. Some talk about the EBA, others talk about the European Central Bank, the third option being to create a new agency. I think the discussion is not yet totally mature on that. Now, what I think should be taken into consideration if this need for more coordination and this possible centralization of supervisory powers has to materialize through a new body or through new powers for an existing body. It's very important that the mandate is clarified as from the start. For example, we need to know whether there will be oversight responsibility for a new body. We need to clarify what will be the relationship with local supervisors and with banking groups and banks, individual banks. And also, if this coordination is materialized through a mandate providing for direct supervisory powers over banks, it's very important not to duplicate supervision, and we also need a very broad scope of these supervisory powers, including all member states and including all obliged entities.
Interesting. Thank you so much for your views, for sharing your views, Roger. And I mean, much is that's desirable. That's further down the line. But I think we've got some other questions regarding closer future. So particularly to Aurelia regarding the 6th AML Directive, because that's what's ahead of us as the next step, right? There are questions on the chat coming regarding the requirements listed in 6th AML Directive, which I don't know if you can maybe briefly list those. And also questions regarding how the implementation will unfold. What do you think, looking at observing the 5th AML, the 4th AMLD and the 5th AMLD implementation, sort of countries lagging behind the schedule? What do you think is going to happen with the 6th AMLD when the deadline kicks in?
Thank you very much for the question, though. This is a tough one. I'm very happy about this one because, well, my presentation covers, very, very theoretical things about implementation and which countries have implemented and which not. Here is a very material question. Well, the 6th AML Directive is a bit different from the 4th and the 5th. When we talk about the 4th and the 5th, we talk about specific rules that are applicable to the due diligence, to the implementation of simple AML measures. But the 6th Directive is completely different. It talks about criminal law, and even I myself, I'm not well qualified to talk about criminal matters. But what we can understand here is that, well, the intention is to harmonize EU law and of national countries, just to be sure that all these activities that are related with money laundering matters, these activities are punishable, and the punishment itself is long enough to cover these matters. So this is what is covered there, and well, if you open the directive itself, you will see that a lot of activities are enlisted therein, and these activities are punishable and should be implemented in all national laws as prohibited. And also what we can see is that one important thing that aiding, abetting, inciting, and attempting of these activities, these should be punishable. So not in all countries, all these core activities are punishable. So as of implementation of the directive, this should change. Now, as for your question, whether we will face any issues with the implementation itself, most probably yes. First of the reasons might be, well, the corona crisis, as I mentioned, well, itself, it is not related in any way, but what we have seen in our country, and we are seeing and facing the same in other countries, is that the primary focus right now is to combat the corona crisis. And for that reason, a lot of amendments to the laws are upcoming. So this is where our parliaments are currently focused on. So this might be a new challenge, especially that a lot of public institutions are working from distance. So this means that not all the meetings are carried out right now. And of course, another thing is that this is criminal law, and this is related to not the AML law itself, but this is related with the changes to the criminal laws. And, this may delay the process because a lot of additional institutions will have to be involved to make sure that the directive is properly implemented. So this is at least my opinion.
Mm-hmm. Mm-hmm. Thank you so much. I personally slightly disagree with the impact that coronavirus may have on the implementation when we look at the deadline. I mean, the deadline for 5th AML transposition passed in January, right? So you could argue that, yes, of course, it will delay procedures going forward, but if the countries had taken appropriate measures upfront, when the 5th AMLD was published in 2018, and had been given 2 years for the implementation, probably the result by now would have been different, right?
Sure, this is also true. This is a different view. So as I said, this may depend on the countries, In some of the countries, the process is very fast. In some of the countries, it's slow. So in the countries where the process is very slow, they will be searching for the reasons to delay.
Yeah, interesting. Thank you so much, Aurelia. And Tombi, I have some questions to you as well, if you don't mind. So one question was regarding the current AML regime. Will it ensure KYC requirements for wallet providers?
Yeah, so what's interesting is that wallet providers are very technologically advanced sort of entities. And one always needs to remind them that although they are doing, shall I call it, banking or financial services in a very fourth industrial revolution kind of way, they are still bound to the sort of cardinal rules around KYC. What I find in my space is that when we speak to these wallet providers, we are having to do things very differently. And sometimes we do them so differently that sometimes people think that the cardinal rules of KYC do not apply to sort of wallet type providers. They do apply to wallet type providers. It's just done very, very, very differently. One of the ways, for instance, in my personal experience, we've been able to do something from a sanction screening perspective is to work on an exception basis in terms of how do we deal with screening of alerts and the like. So very simplistically, what I'm saying is that wallet providers were, in my space, given a open IP to call and given sanctions information. And we said to them that you're going to have to run an algorithm during your onboarding process to ensure that you're getting a status of the people you're onboarding as to whether they're subject to sanctions or not. But because these wallet providers don't have massive teams like financial institutions do to work the alerts that they're getting, the algorithm that they are using looks very, very different from the algorithm that we are using within banks. Theirs is a lot more restrictive in that if you almost even look like a hit, that's where they actually stop your onboarding process and they enter into a sort of a different process that they run. But do I think that the directive will ensure compliance? I think it was Roger who said it when he said that banks are a very critical part of the fight against AML and CFT, and it is likewise in the wallet space, the compliance officers that either service those entities alone, or if they are using their services through bank, those compliance officers are going to have to be so much more forward thinking in how they ensure that these wallet providers actually comply with KYC.
Great. Thank you so much, Ntombi, for this. Unfortunately, we've run out of time, so we won't be able to answer more questions. But we will try to follow up by email. And this brings us to the end of the webinar. So my last job here is to say big thank you again to Aurelia, Ntombi, and Roger for your participation. Also, thanks to Katie for looking after us from technical side of things today. And big thank you to everyone for dialing in and for your engagement during the webinar. We will reach out to everyone following the webinar with the slides and the recording of this session. And we'll get back to as many questions as we can that we didn't manage to answer now. Hopefully, see you all on another webinar soon. Thank you very much.